My name is Julie Katzman, and I'm the General Manager of the Multilateral Investment Fund, or the FOMIN. We're very excited about the Foromic, as I think you know. It is the largest gathering of microfinance and microenterprise professionals in the region every year. We expect there will be probably over 1,500 people in Montevideo. We have a very interesting but focused agenda. And a big part of the agenda this year is about social performance. What does it mean, social performance of microfinance institutions? How do you measure it? What kind of metrics are there? How do investors feel about this area and this issue? And how do the microfinance institutions themselves feel? And in what way can looking at social performance be of a useful nature to the microfinance institutions? We also have a couple of very interesting panels about microfinance in large countries, focusing on Brazil, China, and India. And we have people joining us from China and India who will be talking about those examples. While the microfinance industry did experience some negative results as a result of the financial crisis, the industry as a whole fared much better than many people thought. It continued to grow in 2009 and 2010, but that growth was lower than it had been in previous years. Whereas on average in the previous decade, let's say the industry had been growing at somewhere between 20 and 30% per annum, last year on average it grew about 13% if you're looking at the number of customers. That means that people who are receiving microfinance, that portfolio of individuals, has grown very substantially in the last decade. In 2001, there were approximately 2 million people receiving microfinance loans, microcredits in Latin America. And in 2010, that's 10.5 million people. I think this crisis came at a moment in time when the institutions were able to take a step back. They were relatively well capitalized, and so they were able to take a pause and say, this year is not about growth. This year is about preparing ourselves institutionally, strengthening our processes, strengthening our people, investing in our people and our processes, so that for the future we're much stronger institutions, and if something like this happens again, we'll be even better positioned. It was also a moment in time when the work that the MIF has done over the last 10 years really bore fruit. Because in Latin America, a much greater percentage of microfinance is transacted through regulated financial institutions and deposit-taking financial institutions. Having a strong deposit base that's locally based, funding based through deposits, is a key success factor for these institutions. We think that the industry is well positioned because it took this year to year and a half to reinforce its management procedures and reinforce its capital structures and learn new management techniques like restructuring loans. It's better positioned today than it was. Most institutions realize that growth for the sake of growth is not a sustainable strategy. Most institutions realize that diversifying their funding base is extremely important. Diversifying their service offerings is extremely important. So I think that when you look at the institutions today, you see a much healthier group, much more diversified group of institutions who will be well positioned for growth into the future.